Let's take a look at some information and charts on Bitcoin for Brave New Coin. So the biggest issue most recently for fundamentals that actually matter was the Bitcoin mining issue in China. Previously, mining had been significant in China, which got banned for real this time. And we can see that on the blockchain. There's debate as to whether the ban was soft or extreme, and all that at the end of the day doesn't matter because we can just see the data. We can see block times going to the highest in modern times. Since post 2011, block times have never been this high. This is an average of 25 minutes. That means inflation issuance was down to all-time lows. All of this is just temporary, as this stuff will autocorrect every 2,000 blocks. And that's what it did and continues to do. Block times are now back to reality at around 10 minutes. And we can see hash rate here in the line, difficulty in the dashed line here. Difficulty is lagging hash rate, so it'll adjust depending on those checkpoints. And at the end of the day, all is well. The network adjusted as expected, and hash rate appears to have finally stabilized after 4 consecutive negative difficulty adjustments, which is probably the most significant negative string in history. We had a combination of price reversing strongly and China bringing the ban hammer on miners. So collectively, that's going to impact hash rate significantly. So now as the dust is settling, we have far fewer miners in China by a large percentage relative to the rest of the world. And hash rate has begun to become more distributed globally. Miners are still making a ton of money at 4 cents per kilowatt hour. If we go down this list, I think almost all of them, except some miners from 2014, and this thing not SHA-256. Sometimes you have to be super specific. But anyway, basically any miner since 2014 is making money at 4 cents per kilowatt hour. So all's good there. The downside with this is miners are in profit probably to 14K or lower. And that means that they can just sell agnostically all the way down. If they're rational, that's what they're doing in a bear market, or they're ultra long-term holders, believers, right? Not necessarily rational, where they'll just eat those costs up front. They'll mine at a loss up front, and then hopefully that'll pay off, right? In 1 year, 2 year, 5 years, whatever it is, whatever their time frame is. But if you're a miner of industrial size with significant overhead, you care a lot more about the near term, I'm guessing, or at least from quarter to quarter, than maybe the average person would as a hobbyist. If you look at transaction counts partially because of mining reasons, partially because of just activity in general, have fallen off considerably from those highs. And relative to Ethereum, Bitcoin never really is going to have a high transaction throughput output. Some of this is batching related, scaling related. Some of it's lightning related, layer 1 versus layer 2, that sort of thing. I'm not making excuses for the network. I'm just saying, like, look, even this stuff here in 2019, 2018 was Veriblock, which is kind of a meaningless sidechain, basically, that is just sort of parasitic. And it makes this metric look great, right, at that time. And you get a lot of this for a lot of chains where it's just meaningless garbage running up the numbers, specifically these proof-of-stake networks with no transaction fees. But if fees are low or zero, you're more likely to encounter just spam, basically. Even still, transaction counts down significantly. Average transaction values, as expected, kind of peaking at all-time highs in price and down significantly. If we look at the activity in the mempool over the past 6 months, that is down significantly, which isn't necessarily bullish. It's much like the gas on Ethereum. You don't want gas to be zero. You want people to be transacting on the network. You want some fees to at least show that, yeah, there's real people here, there's activity. You don't want fees that are astronomical. You don't want unconfirmed transactions into the 200,000s, right? But you don't want zero, right? So very clear difference. This goes along with volume. This goes along with web traffic, Google Trends, price, all this stuff's related. More activity is always bullish for any chain in the history of all analysis ever. There are over 8,000 nodes on the network, most of which in the US, most of which have the most recent version or the most recent versions of the network. Always good to check that for any network. You want nodes to be upgraded and updated. Because if they're not, then you have issues of kind of destroying that decentralization if there are exploits that can be pushed through some of these non-upgraded nodes. But it looks like for the most part, most of these are at least on 0.2 or greater. If we look at the Bitcoin days destroyed, which is basically what the HODL metric is looking at, for any coin on the chain, you can look at its age and when it's last moved. Historically, all-time highs in price have been pretty correlative with at least 50% of the chain moving. And this time we didn't get to 50%, we got to about 38%, 35%. All of that continues to decline significantly. There's a lot of on-chain activity talk about this is incredibly bullish. There's Willy Woo, there's Clemente, there's a few other people talking about this stuff. Basically what they're getting at is holders aren't selling, and you're seeing that here, right? Sure, right? That's bullish, but when do you reverse that thesis and you say, all right, we're at 29K, we're more bullish now, we're at 28K. Metrics are still bullish. What's going on? Why are we still dumping, right? The worst that could happen here is we do go below 25 and you see an uptick in days destroyed, because that means holders are capitulating and will inevitably bring us lower. So that is a risk. That is not a high probability, but that is something to pay attention to. If we continue to droop lower, 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 and you're seeing diamond hands get destroyed, cold wallets getting cracked, it's basically unlocking supply in the near term that was otherwise out of circulation. You know, that is not bullish. So watch for that. But yeah, right now, sure. Holders aren't selling yet, right? That's the caveat, yet. If price goes lower, we're going to see some increased activity there, is my guess. You typically see Bitcoin days destroyed spike up at euphoria or fear, so tops or bottoms. Block sizes on average are way down from all-time highs at 1.4 megabytes. Part of this is mining related. Again, part of this is activity related. All this goes along with mempool and transactions per day. All that stuff is related. Fees were to an average at an all-time high in April, and all that's down significantly from around $50 on average to $3 on average. Part of that is price, part of that is activity, right? These things go hand in hand. They are inexorably linked. NVT adjusted 90-day average is declining, has been declining. This is also a massive buy signal for the NVT maximalists. I hope that's the bottom, right? I hope on-chain data is real, but a lot of it is confirmation bias. A lot of it is hope, right? We hope people aren't going to keep selling. We hope the hodlers are going to keep hodling, that sort of thing. Is it enough for me to be convinced to start buying at these prices? Not really, right? For me, I'm a technical maximalist anyway. On-chain data will help you, certainly. But for me, it's all about the first layer on-chain stuff, transactions and active addresses, right? If active addresses are down and continue to decline, I mean, look at this, right? This isn't bullish for any chain. We went from 1.13 to around 800,000 active addresses. You got to see that start perking up in the near term. It did a little bit, but immediately, you know, the activity just isn't there, right? Volumes just aren't there. On-chain use just isn't there. And price does not like any combination thereof. Looking at MVRV in the green here, price in the red. MVRV is a measure of market cap versus on-chain activity. Historically, for most chains, once MVRV gets above 2, it gets into the overbought territory. Previously, Bitcoin had reached 4 or 5 plus in 2013. In 2017, it reached 3.5, and most recently, it reached 3. So in the future, you know, I expect MVRV to continue to decline, maybe because it takes more and more money to hold the market cap at a certain level versus on-chain activity. I don't know, just speculation. The next peak high will probably see an MVRV peak out at around 2.5. That's just a guess. And as far as downside is concerned, anything below 1 historically has been an excellent buying opportunity. And we're currently at 1.26. So not quite there yet. This isn't a screaming, raging buy until it's sub 1 and really sub 0.8, you know. So this could go significantly lower. And it could also stay in that range like it did in 2015. Basically stayed there for a year before we got from below 1 to above 1. So be patient. This could take a long time. Things could get way uglier than they are now. And I'll show on technicals what I mean by that. Bitcoin, Google Trends down significantly, just like everything else in crypto. Didn't quite reach our peak in 2017, 2018. On Google Trends, maybe it's because most people nowadays know what Bitcoin is and aren't really necessarily searching for things, or there were less articles. I don't know. I don't know why we were less despite a mega all-time high, right? Our all-time high this go around was 3x the last all-time high, but retail interest or search interest just wasn't there relative to 2017. If you compare this to Ethereum, we're still more than Ethereum, but Ethereum's all-time high in Google Trends most recently was a big spike from the previous, basically 2x from the previous all-time high. Just some food for thought, some interesting stuff there. Maybe that represented a bear div at the end of the day, less interest, price sitting at highs, I don't know. But in general, we're not going to magically reverse if Google Trends keep declining. If all of those metrics I showed you are declining, that's not good for price. So look, if you're an ultra long-term permable, a lot of what I have to say in the near term from month to month doesn't affect you, doesn't matter to you, right? But just be aware that you could take a 50% drawdown here based on MAs. If we look at the 200-week moving average, which historically has been the bottom, that's currently at 14K. That's going to keep moving up slowly. The 2-year MA multiplier, which is these other lines up here, the green line's the 2-year MA, which is at 20K. So if I am ultra conservative, ultra passive with my capital, I'm not a day trader, I'm just wanting to get in at a good price. I'm dollar cost averaging anything between 20 and 14, buying more and more the lower we go past 20. And I'm saying to myself, I don't care if this is a 1-year consolidation, if this is a 6-month consolidation, I don't care, I'm buying, right? That's the attitude and mentality you have to have if you're an ultra passive, ultra conservative investor. Not investment advice, I'm just looking at technicals here, but I'm saying you have to set up that plan in your head, because if you're ultra passive and ultra conservative, you're not going to want to buy it when it gets that low, because it's going to look ugly. It's going to look like we're going to zero. I guarantee you it's not going to look great. Okay. So you got to set this up for yourself ahead of time. Conversely, on the bullish side of things, when this thing gets 5x its 2-year MA, that has historically been the high. And this cycle, we just barely nicked it. We didn't quite exceed it. And that was enough, right? So this definitely is telling you ahead of time. People complain about it, technicals being lagging. Well, this thing is pretty on the money, you know? So if we get to 100K plus whatever it is, post whatever cycle we're in now, right? That is your sell signal. Also, as far as downside is concerned, not a lot of volume historically relative to everything up until this point. Anything pre-October 2020 has mainly been, volume-wise, sub 12K, right? That's where all of the volume historically sits. And I don't even have the rest of the chart on here. But if you're looking for mega volume support, it's down there. If you're looking for rate of change pitchfork support, it's between 14 and 20, let's say. Again, matching that 200-week to 2-year MA multiplier. And there's some pivot support at 12.5, whatever that is down there. How the pitchforks works, you pick 3 points, you get a rate of change, sell zone up here, buy zone down here. It may graze it 3 times, it may exceed it, whatever it is. This gives you a plan ahead of time. The most troublesome thing here is we have a death cross on the daily with the 50 and the 200, and we're below the median line of the pitchfork. Bearish continuation should happen, number one, and bearish continuation should lead us to lows around 20, right? This may take until October, which historically is when things start to perk up again in Q4. Ideally, the easy trade is to drift lower until October, maybe 20K, maybe 19, somewhere in there, and then start another run with a little bit more momentum in the tank. Because right now, again, based on fundamentals, there's no there. Everything continues to decline. Still not really a bull div here either on RSI on the daily. On the cloud in a vacuum, not knowing the ticker, just popping up the cloud here, I'd say 44, 45. Looks like a great level for a mean reversion attempt. Otherwise, we're below the cloud. That is bear territory. It's very simple. The cloud is very simple if you don't know what it is or how to use it. Bottom line, if we're above the cloud, we're bullish. If we're below, we're bearish. If we're in the cloud, we're intermediate. And it's very, very clearly below the cloud here. So if you're bullish here, you're hoping for a bullish TK cross, which is this blue and red line, to at least signify to the shorts that it's over. We're going to try to mean revert. We're not bullish until we're back above the cloud. So a meaner version could take us to 45, 40, whatever this is here on the cloud, 46, I don't know. But you'll see that materialize through an edge-to-edge trade, most likely, which again is potentially not until October. You know, this thing has a ton of time still. You've also got macro head and shoulder concerns, whether or not you want to believe it, it's still there. You've got post-May micro head and shoulder concerns on this aggressive diagonal selling. So we're still murky. We still do not look anywhere remotely bearish enough for me to start buying, and definitely not bullish enough for me to start buying in a big way. What I mean by that is leverage, right? You buy on spot, whatever. It's no big deal. You know, you buy on leverage, you have a risk of being liquidated. This is the 12-hour, also telling you not above the cloud yet. Pretty simple, right? Above the cloud, below the cloud. Bullish, bearish. Boom, that's it. That's all there is. We're not bullish again until we're above 35K on the 12-hour, and that would bring us into August if we just stay sideways. And then on low time frames, on the 4-hour, again, there's this ugly head and shoulders mess. There's an ugly falling wedge. There's an ugly descending channel. There's an ugly descending triangle. All this stuff is conflicting as far as biases are concerned. We had a range break the other day, then we had return to the range today on this conference stuff, and it looks like it's being sold off back down below the range again. So chop is probably more likely than anything in the near term. I'd watch this volume profile. Anything above 35, 36, it's time to party. Anything before that, it's going to have a heck of a time getting back into this range again. And it needs volume to do anything. This is Bitstamp, so volume is going to be trash anyway. But all this stuff talks to each other. You know, it's like depression. You don't usually, magically get out of it, right? It's just a slow process. You don't even notice. Things start looking brighter. Birds start chirping. You start folding your laundry, doing your bed, right? I don't know. This is what people tell me. And you're going to see that with on-chain metrics. You're going to see that with volume. And you're definitely going to see with price as we start making higher highs instead of lower lows. Lastly, I'll just mention the ETH-BTC fund I trade for Techemy Capital on Enzyme.finance, along with the DeFi portfolio. You can send Ether USDC into the smart contract, allowing me to effectively copy trade those funds, or just watch what I'm doing. You can see AUM allocation performance, where all of the money sits, everything I'm trading in the DeFi landscape. You can see all the yield plays I'm making through Yearn, Compound, and Aave. You can see me in DAI and USDC, in vaults. You can see all the trades I make all down here in the trades tab. So that's all I have for this one. Like, dislike, comment, share, subscribe, and happy trading.